Good morning, good afternoon, good evening, traders from across the globe, and welcome to the 1,842nd edition of Short-Term Trading Live with Oscar Carboni. Traders, this is going to be quick. There's a lot going on. Let me remind you before we get into video 1842, it's for trading on Sunday through Monday, October 15th, 2018. What I want to remind you about is that volatility is extreme. Risk is really high right now. Do not trade without stops. Don't trade with money you can afford to lose. You cannot afford to lose it. Don't put it in your account. And do not trade alone. Come join me at livewithoscar.com and I'll try to help you stay calm and I'll show you how to be a professional while these markets whip around. So now, let's get right into this. For trading on 10/15 October, I'm going to tell you right now, technically, there's a lot of good, but there's some bad too. But more good than bad. I'm going to show you those charts. The good reason why these markets should hold somewhere down here and head back up. The bad, of course, would indicate more downside. So I'll show you the charts. Most of them are on this side, but of course, we're not completely out of the woods by any means. What started this? Bond yields spiked, crude spiked. Remember I came out in front of everyone before any of this happened? And I said these two things have gone too far. It's going to change the market's mood. Well, it did. And I mentioned that the Russell let us down. It is my theory now, from doing the analysis I did over the weekend, at least for tomorrow, we'll see where it goes from there, the Nasdaq is now going to lead us back up. So, technically, there's a lot of good. I'm going to show that to you, traders. I don't want to waste any more time. With no further ado, right now, let's go look at some charts. Traders, this is where all the magic is. It's all in the charts, right? It's the analysis and how we read it. So simplified. Nothing on this chart but the 200 bar moving average. Fund managers, blue light special. They buy when it's above. They sell when it's below. Nasdaq got below for one day, turned around, got back above, and is above again here. I like that so far. Dow Industrials. This is the market, right? This is the main market. I think it met its projection. It got down to the 200 bar. It was the last of our indices to reach the 200 bar moving average. Last time it got down to the 200 bar, look, we were almost at the same height. Had a dip. A little bit lower on the 200 bar, but same sort of thing happened. Had a dip from almost the same height, hit the 200 and held. Every time it hits the 200, it holds. This is the market, right? That's Wall Street. Maybe that is a sign, like it was here, here, and here, that we will hold. Number two, good news, right? Then we look at the Emini S&P. The only thing bad about this is you did settle for 2 days below the 200 bar moving average. I do not like to see that. You've got a settlement here and a settlement here on this bar. I don't like to see 2 days below such a big average. So that goes to the bad side. But when we look at this, look at the Nasdaq on a weekly, and the weekly is more of a Bible. It's more of a roadmap of where the market will go than a daily, right? Daily's for quick trading. This is for your trend. As you can see, the 50 bar moving average, very important here lately. Right there, we nailed that average on Friday, and the channel trend line bounced all the way back up to here. Last time we nailed it, we bounced all the way up to here when we closed, and then it continued on. Last time we hit the average, we had a major rally, but not just the average. When you hit this trend line, you rally out, right? So it's not just the average. They came together, the average and the trend line, and we hit and rallied out. I'm putting that on the good side, wouldn't you? I think that's great. Don't forget, I'm the Act Bash. Make sure you show up. Come to my site. Let me know you'll be there. And then we've got Emini S&P. It penetrated, but it's back, right back to the same spot of the average. So it got through, but it's hanging right there. So everything is respecting the average, the 50 bar moving average, as it does almost every time. Plus, there's a trend line here. Actually a nice channel, and it's been respected each time we've gotten to it. All of this is good so far. Then we've got this. Transportation average. Penetrated that and stayed underneath. So not so good there. But it's okay to penetrate just a little as long as it comes back up. This one actually got through the average and through the trend line. But it had a lot of momentum. It was a real quick mover during the down move. Hopefully that will hold. So I guess we throw that on the bad side, but we've only heard bad once or twice. The good's been almost every chart. Now this is a great chart. Dow Jones Industrial Weekly. Once again, this is the market. You almost never get through that average. One time, this whole series, I call it one time because it messed around here, made like a little W bottom. One time you had a problem, and that's been about it. You know what year this is? 2011. And you just bounce off that average every time you get near it. And here we are as of Friday. So that has to go in the good column. Now, all of this can change by a market smashing down on Monday and us continuing lower, and my analysis may be completely different on Tuesday. But for now, this is what I see. Let's take a look at the next chart. Apple, more of a reason. Apple holds the average after a cut through it, gets back above it, holds the trend line, and I've got an OMNI buy signal in Apple, and Apple is a huge portion of our market. So Apple pushing us back up. Hopefully we'll take the Nasdaq with it because the Nasdaq seems like it wants to go higher. And this is one of the reasons why I think maybe the market will gain its legs again. When crude rallied, it was 8 days ago. When I came out and did a video, it was 9 days ago and said crude's too high, it may change the market's mood. 8 days after, 1 day after that and 8 days forward, we just dropped and dropped. However, you know when that rally started? 8 days ago, or when the rally topped out up there. You know how long the S&P has been going down for? 8 days. Right when this hit the top and I thought it was too expensive, S&P started to come off, and we've had 8 down days in the crude as well, so that's a really nice thing to see. That's a positive. Interest rates, the thing that got us in trouble, if you ask me, more than crude. When bonds go down, interest rates spike up. The yield. So that's how this works. Bonds spike down, Fed came out and raised rates, then traders came out and bashed the bonds, which raised rates further than the Fed had in mind, and that spiked us down to here, and the market felt a little pain for the readjustment that needed to be made. But even this, we're starting to go back up a little bit, right? At least we're all the way back up to here from down here. That relieves a little bit of pressure on bond yields, and I think that's another positive. And then you've got the Russell. This is the negative of all negatives. Everything about this chart is bad. The weekly is bad. The daily is bad. You're way below the 200 bar moving average. And the analysis I did Sunday night tonight for Monday tells me Russell wants to take the market back down again on Monday. This one is the bad one. Of all the charts I showed you, there were a couple of iffies, but this one's bad. So just wanted to point that out to you. We will go with buying the dips in the Nasdaq and or S&P. I'm not going to buy the dips in the Russell. If the Russell doesn't continue to lead us down, Nasdaq, remember this, will lead us back up from this day forward. Let's see what we get. I'll meet you all at livewithoscar.com. Traders, you've seen the technical analysis. You see that we're in an area where there's a lot more good than bad. But if we start to go again, boy, it could get ugly. I think the 200 will save us. I think the Nasdaq is going to take us home. Now, do not trade without stops because this could get ugly fast. But for now, we're going to suspect that with earnings season starting tomorrow, actually a little bit of it started Thursday, Friday, you got to expect that earnings will be good for the last quarter, right? So if earnings were good for the last quarter, bonds have come back up, which means yields have come back down. Crude has dropped, which means that takes the price pressure off of inflation. Why not expect the market to gain some legs? So that's my technical reasoning behind it. All right, traders, livewithoscar.com. If you want to trade with me, join me in my live trading room and then join the Platinum membership. Those Platinum membership, I offer real-time recommendations called my OMNI recommendations. When I'm going to trade, when I think it's time for you to trade, you get notified in a split second the same time we're going to trade. When we're getting in, when we're getting out. If you need that help, just come to my site and join the Platinum membership. I'll be there to help you. All right, traders, that's it. I'm going to watch the markets and whatever we got planned for this evening, sir. And remember, keep your emotions out of trading. One of the best things you can do, and I know right now times are trying and markets are flying around, but one of the best things you can do to keep those emotions at bay is say this to yourselves: every morning, every afternoon, and every evening. And you know what that is. Stops are in. Emotions are out. Rock and roll. Thank you, everybody, and I'll see you all at livewithoscar.com. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.